Hello everyone, the AI thesis has been rewritten as of last night with Nvidia's Q1 2027 earnings report. Welcome back to the world's best investing podcast. Today I'm going to explain something massive that just happened last night with massive implications for Nvidia itself, AMD, Palantir, iren, whichever other company you happen to think is a prime jewel of the AI trade. It's been rewritten, right? Because over the past 3 years, bears were coming out of the cave saying once in a while, CapEx is too high, this might not be profitable. Per what we see in Nvidia's earnings report last night, that has completely changed. Tokens are now profitable. Agents are profitable. There's no limit to the volume of agents that can and should be produced. And so we've entered a new economic paradigm in which productivity is no longer a function of how many humans you have working and for how many hours. It's just a function of agents, and you can print an unlimited amount of that. So I prepared an in-depth presentation of Nvidia's Q1 2027 earnings report, as I'm known to do once in a while, so let's get deep into it. Okay, so big deal for Nvidia, Palantir, AMD, any other company. As I said, you happen to think is a prime AI jewel, right? So tokens are now profitable. This is the key quote from the earnings call transcript from Jensen. He said, tokens are now profitable, so model makers are in a race to produce more. In the AI era, compute capacity is revenue and profits. He's been saying this, I think, for quite vocally for the past 6 months. And Lisa Su, AMD CEO, has also been saying this. The world has seen an inflection point in terms of the capabilities and profitability of agentic models. Some numbers in the earnings pool were pretty interesting. So the rental price of H100s is up 20% year over year. For A100s, that's 15% up year over year. And then Q1 revenue and free cash flow are just ridiculous. You can't wrap your head around these numbers. Q1 revenue, 82 billion. Q1 free cash flow, 49 billion. Just staggering, unbelievable. But the truth is, this seems to only be the beginning for this company and for basically anyone else in the AI economy, and generally for civilization as a whole, if you want to put it like that. Because historically, compute demand has largely been a function of the number of end human users. And right now, there's around 1 billion of them, according to Jensen. I would have said it was more than that, but apparently it's 1 billion. And the point is that with the capabilities of agents rising vertically and the profitability too, we now enter this new inflection point in which every human spawns N agents and every agent spawns sub-agents. And so each one of them consuming tokens, and there's no limit, theoretically, to how many agents you can deploy profitably and the total volume of value or profits that they can produce. So this is a new historic paradigm in which the economy changes greatly. And Jensen keeps saying these things in the earnings calls, which I think sound a little bit like fluff. And maybe to the untrained eye, like in the AI era, compute capacity is revenue and profits. People have been very skeptical about this, but it's actually what's happening. If you look at Palantir's earnings report, which we did last week, and you yourself might be a user of these large language models like Claude, Gemini, ChatGPT and stuff, they're so good. And if you're not working with them, you're not as productive as someone who is. So this is just, it's pretty extraordinary what's happening. And this earnings report is a confirmation of that. The second leg of the AI thesis is coming, and that's that inference is moving to the edge and physical AI is now going to take over. Very interestingly, Nvidia's physical AI revenue came in at a $9 billion plus annual revenue run rate in Q1 fiscal year 2027. And interestingly, when Jensen was talking about this, he implicitly confirmed my big AMD thesis, which was basically AMD, I think, is going to be the number one player in AI at the edge. He said, there's no choice but to put the computer where the context is, where the action is. You can't put that in the cloud. So he's talking about if you're going to run inferences at the edge, the actual compute engine has to be sitting at the edge. And that's the whole point of AMD FPGAs, field programmable gate arrays, which are basically like ASICs that change shape on the go to optimally run any neural net. So it's basically circuit level optimization. It literally, an FPGA takes on the shape of whatever neural net you want to be running. And that's sort of hyper efficient inference, and it's local and it's circuit level optimized, as I was saying. And this is what I believe sets AMD's free cash flow per share on an Nvidia-like trajectory. So the company is already doing very well, up from $130 in 2024, kept banging the table, even in 2025 when it came down to $75. Yesterday, it was trading at around $450 or something like that. So the thesis is doing very well. But my point is, that's just the beginning. This is just the beginning for Nvidia, just the beginning for AMD. This is AMD's big chapter coming up. you can see how extraordinary the growth of free cash flow per share is for Nvidia, which is the purple line. And what's interesting is the jump from Q4 2025 to Q1 2026. That would be the natural calendar. So this is Nvidia's last quarter. Look at this increment, especially from mid 2025, early 2025. What's happening is these guys just produce the print chips and then people buy them. There's massive process power, pricing power. At the beginning, it was a little bit of a faith trade. So I think the industry was going by qualitative signals, as in, we got to train models because we think they're going to be really useful. And they were probably observing qualitatively users leveraging these models to do things. That's what I was doing. For the past few years, I was just looking at people and how much time they spent talking to LLMs and the degree, the quality of the conversations and stuff rising vertically. So this increment here is insane because if you think about the numbers, the whole physical AI thing, how big is that going to get? Well, if you go back to this graph, and again, the purple line is just the volume of agentic users we might expect to see over the coming few years. A lot of that is going to spill over into the physical domain. So I think you're going to have agents that both operate in the digital domain and then move into physical shells like humanoids, cars, fridges, whatever you want to perform actions. And if you think about what's happening with Tesla, for example, and the remarks Elon is saying about, in 5 years' time, that he expects there to be 100 million humanoid robots and stuff. This is the sort of software part of it, the compute part of it. But it's going to be extraordinary in the sense that, well, if this is free cash flow per share today for Nvidia, how big does it get when we have 100 million humanoids, 500 million, 1 billion, 2 billion, 3 billion, 5 billion? Why don't we have 150 trillion humanoid robots? Well, it would make a lot of sense if the productivity and profitability of agents, and then by extension, physical AI agents keep going up. And that's what's happening right now. So it's mind-boggling, it's ridiculous. There's this very famous post someone made, I believe it was a year ago, saying you're not mentally ready if this is not a bubble. And, it's just extraordinarily productive, this technology. Now, the gap between AMD's and Nvidia's free cash flow per share growth, I think closes in relative terms, take that with a grain of salt. But I think that closes with physical AI because this part of the AMD thesis is radically misunderstood. Everything about AMD has been radically misunderstood, right? As I've been saying for years. But this bit is especially important because physical AI, if you think about the economy right now, what is it, like $80 trillion worth, approximating $100 trillion worth soon? That's just humans processing information and then deciding what action to take next. And a lot of that is pretty elementary, pretty basic. Agents can do that now. And if you put a physical body, if you give them a physical body, they're going to be able to do a lot of that. So basically, the entire economy just gets compressed into an API. And a lot of that API, a lot of the way that value gets delivered to people, to the economy, that's physical AI. And by extension, a lot of that is just FPGAs. Because these devices have, they can't get too hot because the battery runs out. They don't have a lot of space. And they're going to be running this vast diversity of workloads. And Jensen was actually talking about this during the earnings call, how diverse AI is in terms of the jobs to be done, and then by extension, how diverse the compute has to be. Diversity with strict thermodynamic requirements, limitations, literally, small devices that can't get hot, have, can't use too much energy because they have limited batteries and stuff. The only way you really solve that replicably at scale in a way that you don't have to predict exactly what neural network each device is going to run is FPGAs. It's basically ASICs that change shape on the go. The world doesn't even know about this compute platform yet. If you talk to the average engineer, they will say, well, yeah, FPGAs, they're not going to work, they don't scale, whatever. It's not true. If you look at the qualitative milestones of this technology, recently IBM ran a quantum error correcting algorithm on an FPGA, and it was orders of magnitude faster and more efficient than any other compute device. That to me is just a taster session of what's coming now with inference at the edge and stuff. So as I was saying, massive, massive implications for all of these companies. I think this is just the beginning for Nvidia, for Palantir, for AMD. And these are the three main takeaways, which is one, tokens are profitable. So every model maker now races to produce more, financed by the cash these tokens generate. And I think Anthropic is a particularly good example of that. Agents are scaling. We go from 1 billion users to many, many billions of synthetic agentic users. And then I don't really see the actual limitation in terms of the volume of users we can deploy and the value they can create, which I believe just goes vertical. as AI scaling laws continue accelerating. And then physical AI becomes a lot of how you monetize that. Because as I was saying, the entire economy is just humans doing basic things. I think that gets abstracted away into an API that delivers value via physical AI. And I think a lot of that just comes down to FPGAs and AMD's infrastructure, which is personalized compute at scale in a way that optimizes cost per token in a way that others really can't replicate. And I think Nvidia will do very well there, but I think this is where AMD truly outperforms. In terms of the implications for Palantir, what this means is if you're running a company, for example, a company right now is literally just a collection of agents that trade tokens. You pay on the one end a certain amount of money for a token, and then you hope to sell that to an end customer at a margin such that eventually you increase free cash flow per share. So you do that at an increasing volume in a way that others can't replicate and stuff. So the thing with Palantir is all it's doing is you basically deploy Palantir in a company, and that starts gathering data and organizing it in a way that you can just feed it into AI models and train the AI models to automate actions within the company. That is bootloading what they call autonomous organization. So you're basically going to swap a lot of your meat-based employees with digital agentic employees that never get tired, never have to rest. They just work 24/7. And I'm not saying no one is going to have a job. I think, again, a lot of what we think is incredible today, a lot of the value Palantir creates or its customers create just gets compressed into an API, and then humans sit at the edges of that and just focus on judgment. But the reason Palantir's free cash flow per share is rising so quickly is essentially this curve, which is the profitability and the capabilities of agents. So digital twins help you gather all the data you need to feed these agents so that then they go on and do interesting, difficult things that create value. And as this curve accelerates, the profitability of agents goes up. I think Palantir's free cash flow per share goes vertical too. So massive, massive rewrite of the AI thesis. We'll go through other ups and downs, but I think that you can't really time the market. You don't know what's going to happen. But these companies are extraordinary, and these are mega caps that are going to become giga caps. I can't even put it into words. I've said many times, I think Palantir is going to be a $20 trillion company. AMD, 5 trillion at the least. Nvidia, very much the same, tens. I think these companies, if they continue executing successfully over the coming decade or two, they become multi-tens of trillions of dollars market cap companies. Anyways, guys, thank you very much for joining me. As always, if you enjoyed this video, could you please like and subscribe and share with one friend whom you think will enjoy it? These deep dives and updates are for free. And so the only way this grows is with your help. Thank you very much. Take care and see you next time.